What's up, guys? Yes, as you know, I'm currently away on holiday, but I took a look at the price action and the optimism that I had towards the end of last week is slowly diminishing every time I have a look at the charts. And I figured that's probably happening to you too. So it's looking pretty boring right now. So I thought I'd give you something pretty to look at whilst we also have a look at the charts, because I just want to take you again from top down analysis, have a look at some high time frame stuff that's worrying me a little bit. And then we'll see if there are any short term opportunities and have a look at news events coming up for the rest of the week. I'm personally not trading short term, but I did take some positions last week that I now have to think about protecting, taking profit on, or just moving stop losses in case things reverse. Because high time frame, as much as I really thought we'd have an up week, potentially looking like it may not do that. So if you're new here, welcome. If you're returning, welcome back. I'm Annie. This is Trade Travel Chill, and I'm going to get straight into the charts. Be sure to hit that like button and hit subscribe if you're not already subscribed so that you can stay up to date with the market. So this is what I first want to talk about. Let me just put my phone on Do Not Disturb. Okay, so the problem that I have with the daily time frame now is, if you've been watching this channel for a while, we needed to first get above the daily time frame 50 EMA if we were going to start to turn macro bullish again. And then second was getting a close above this level here, which was say 115 to 116.5. You can see we're nowhere near that one, so that's not worth talking about right now. And we can see here that so far this week, we've actually rejected the daily time frame 200 EMA. So that's even worse than not even being able to make it to the 50. And what we're starting to see now is a bit of a market structure shift. And it may be temporary, but it also may be the start of something really bad. So as you can see, when we zoom out, we went from higher highs and higher lows, went into a range. And since that range, we're breaking down, and we just use simple market structure. We had a high created here, which was the all-time high. Then we had the liquidation event on 1010 that created a lower low outside of the range. Since then, we've got a lower high, a lower low, and another lower high. That is a market structure change, and that changes us to a bearish structure at this point in time. And we do know about the liquidity. Hopefully you guys know about the liquidity that is, quite high below price. Highest levels being between 97,500 to 100, let's say 101.7. That's the range we're in now, which is where we're wicking into at the moment, currently holding. So a lot of this liquidity has been taken, but not all of it. And if things get dramatically bad, we have another patch of large liquidity between 88,800 to 95,800. Now, the problem is for me, when we have this first event, obviously that causes fear. And then you have to wait. The market has to settle. It has to build a range. And whilst it's building the range, that's where you reassess and say, okay, are people fearful to the point they think it's over, or are people in fear but consider this a buying opportunity? Now, you see that, you identify that through the future market structure. And we're not seeing strong buyers at this level. What that does mean is that at some point in time, they may need to bring things down even lower. Excuse me while I adjust myself. They may need to bring things down even lower, because if the buyers aren't in this range, they have to go down lower to figure out where the buyers are. And with this amount of time passing, I can't imagine why buyers all of a sudden are going to turn bullish here, unless it's on the presence of unexpected, amazing bullish news. Even if that were to happen, it could be temporary, right? So we have to start preparing for this scenario of further downside, especially if we can't, at a minimum, convincingly get above the daily 50 EMA and then start to hold above it. Now, if we go and have a look at the 4-hour, there's another important structure right here. You can see that. Let me zoom out on this. So if you understand the TBD system, things move in levels of 3. So this is our level 1. Then we go into a retracement. We've had level 2. And on prior videos, I spoke in more detail about the potential for a 4-hour level 3 drop. What I said was I was expecting to have some upside this week, because it was likely that they would send price up before down if we're going to get the 4-hour level 3. So now that time has progressed, we can assess how that actually played out. And the start of this week was looking bullish, and we did have the move to the upside into these unrecovered vector candles right here. And now we've had a move back down to the downside. Now, the problem here is, if you understand traditional technical analysis, is that this now is building a bear flag, which was what I spoke about on, I think it was my last video, where I said there was a chance of that happening. And I wanted to see if we'd come up to this area of interest, but we can't even make it that high. Like, you know what I mean? It's not looking great. And this really is looking like a bear flag. And if we break down, especially if we maybe create a lower high under the 4-hour 50 EMA, because that's also going to be about halfway mark of this vector. So if something like that were to happen and we can't get back above the 4-hour 50 EMA, then I would expect that, yeah, we're about to start the level 3 drop. Not what I wanted to see. I wanted to see a bit more upside than what we got, but we get what we get and then we have to deal with it at the time. If we can't even get close to the 50 EMA, because we're literally sitting on the support of the bear flag right now, like prepare for it to break down. You know what I mean? So it's not looking the best. And that's why I just wanted to jump on here to let you know that we may have to shift bias and we may not actually turn bullish until we start to take out some lower liquidity. So let's go and have a look at very short term and what's been happening this week so far. So we have a bit of a tricky week so far, because what we have is on the 1-hour time frame, this is the M formation that caused the reversal from a couple of weeks ago. And we had our level 1 drop into our retracement, level 2 drop. And so again, I'm still on the 1-hour time frame expecting a level 3, but I thought we may have a short-term move to the upside to build some liquidity before we get the final one. And that's what happened. Now, I was hoping that that would give us a 3-level rise before reversing. So equal to the level that I showed you on the 4-hour time frame, and then can get a nice short position from there. I'm not consistently on the chart, so I'm not really doing all that regular updates. But my team are in the Discord. If you're part of our private community, you all know that we have a big team of traders doing updates 3 times a day. So it's very active in there. But as for me on social media, not all that active and not personally trading a lot whilst I'm taking this break. But in saying that, whilst I've been away from the charts and having a bit of a break, my bots have been performing pretty well. So just a bit of a reminder about Pinex, we also have a side hustle, I guess you could say, to our trading, where we have grid bots that set up and they trade really well in ranges. So when you're sitting there looking for a trade and there's, not much movement and we're just going sideways and there's no clear trend, that's when bots kind of take over and they perform really well. So if you don't know anything about bots, we do have a free course. It is linked in the description down below. You can check out how you can get access to that. This course will take you under an hour to do the entire thing. You will learn how to set up your own bots. You will learn how to copy other people's bots if that's something that you want to do. And it's very, very simple. You just first sign up to Pinex using the link in the description of the video, and then fund your account and follow the instructions right here. This video here walks you through step by step exactly how to get access. And then you can do that course in under an hour. You'll learn how to set up your own bots. And if you do join Pinex using the link in the description down below, you also get registration bonus as well as deposit bonuses. So with these deposit bonuses, you can use the bonus money. You just make a deposit of whatever you want, and then you use the bonus money to try out 1 or 2 bots. You get to try it using the bonus instead of your real funds. Get used to the exchange. If you're happy with it, you can then go ahead and set up your actual own bots. And then they also have trading rewards as well. So check all of that out down below. But right now I just have a few bots going. I have Bitcoin, Ethereum, Solana, and BNB, I believe. So that's doing the work for me whilst I'm on holiday and I don't really have to all that actively trade. But let's talk about this structure. So this here, as you may be aware from prior videos, was my prior target for these drops through here, which means we do have to expect one more. And in that, we were hoping to go up before down. So we can see that so far this week, that is what initially happened. Now, the problem with this is that these waves here, they're corrective waves. So the lower high that's here that created today's initial low of the day is lower than this prior high here. That makes it corrective, which means, again, that it's just adding fuel to the fire that is the 4-hour time frame bear flag. So we may not push up too much higher, and this may only end up being 2-level rises on the 1-hour time frame. May end up being the best that we can get. And then if we do drop from here, it's going to make sense as to what is happening, because now you understand the higher time frame. So this here was a bit too much of a retracement for me to be confident that a level 3 rise is going to come, especially because of where it rejected here in the prior battle zone. So the only thing that's going to make me think a level 3 rise will come from here instead of further downside is going to be the presence of important news events. So let's go and check out what Jared has to say about the news events that are left for the week. So this was posted 2 days ago. A deal has been reached to end a shutdown with at least 8 Democrat senators breaking from their party. I think we all know all of this information by now. Let's see what the newest information. Okay, next step for reopening. Senate final passage. Debate and amendments continue, followed by a final vote likely soon as leaders aim to wrap up quickly. Simple majority is needed for passage. House consideration. The amended bill returns to the House for approval. The Speaker must navigate GOP divisions, but is expected to pass it with potential Democratic help and Trump's backing. This could occur within days, though delays from objections are possible. Okay, so this explains why we have a little bit of the sell-off, because it's in limbo and people aren't going to commit whilst things are in limbo. And then number 3, we have the presidential signature. Trump is poised to sign promptly once it reaches his desk, potentially ending the shutdown as early as this week. So any big move that happens is going to be on the presence of sudden news, whether that is a big move to the upside or the downside, and that may be unpredictable. So therefore, I stick to my thesis now that I've had a look at this. I stick to my thesis that it's a tricky week, and whilst the high time frame is showing that we should break down, the presence of good news could give us that smaller time frame next rise. So for me, that's a sit out. That is sit out. If I have good open trades with good entries, which I do, all I will do is move my stop loss to protect some profit, but give it enough room that a swing either way won't take out that trade and see what happens. But I personally, after reading that, I don't think it's a good idea to be taking new trades until we understand what's going on, simply because the market structure isn't clear. If it was very, very clear, you could take a bet on that. But we have some issues. And so let me just quickly explain those to you again. So why I say we have some issues is because of this W formation here. And that is not the perfect W formation. So yes, it was in the perfect area. Yes, it took out a lot of liquidity. It did its job, and that's why we expected a little short-term reversal from that region. But this push up here would have been more ideal if it created a higher high from the center peak of the W. Unfortunately, it didn't push up prior to the market close on Friday. So that was as high as it could go, which was, it's not even a double top, but it is technically a lower high in comparison to this. So it wasn't ideal, but it's not going to be ideal because now we go into the weekend and that's when volume slows down. So this was the weekend price action. Now that price action did not invalidate the W. And that's why we started this week bullish, because if we just follow the pattern as the pattern's meant to be, this is level 1, even though it's not a great looking one. Couldn't make a higher high by market close, but it's still valid into consolidation. That made here, this move right here, the level 2. And so that's why there is a possibility of a level 3, but the level 3 might only repeat the level. It might, again, just create a double top. But like I said, that's only going to happen on the presence of good news. And then potentially as a sell-off after anyway. The higher time frame just looks a little bit stronger than what the lower time frame is doing. And let's go have a look at a 15-minute time frame. So on the 15-minute time frame for me, the 3 levels did play out. So this here was level 1. That was the trap traders into the weekend consolidation. This here for me is level 2. And this spike high here was level 3, which was also the inverted V reversal signal. So for me on the 15-minute, which is relevant to day traders, for me that's played out. It's done. And this is why we're moving down now. So what I would be looking out for is how the trend moves from here. So if we have a look at what's happened today, Asia is currently still open. This is very early for me to be filming videos. I don't usually film videos in Asia. Asia has set its initial high and low. And at this, look, there's still time actually. There's still 1 hour for Asia to go. But I would say the initial high and low for today has probably been set. UK needs to break one of those levels. And what we want to see, even if we're going down, we actually want to see UK break to the upside, because if I go back to the 1 hour, we want to try and get closer to this 200 EMA and the 50% area. So about 104,800, let's say. So somewhere between the 50 EMA and 104,800. If something like that were to happen in UK, what it would mean is that UK took out Asia's high liquidity. And then if US reverses, then that might lead to the higher time frame retracements. But on the 15-minute time frame, it will make sense because we're in drop levels for day traders anyway. So that's what I would be looking out for. To hope that's helpful. But again, I'm not looking for this for new trades. I would rather news come out before taking any new trades. I'm more looking at it to identify where the next big pivot is going to be, and are we actually macro bullish or are we macro bearish? Because that's when you can take the next high probability trade opportunity. So in the meantime, get yourself some education. Go learn how to do the trading bots if you need the education, and set up some bots whilst they're in a range. They can do the work for you whilst you're waiting for a good trend that's worth trading. Enjoy, and I'll see you guys when I get back.